Hi everybody, this is Max Farrow again with Deck Signals, and this is the 5 overlooked risk management tasks that most people kind of, they chuck to the side. When trading, we sometimes forget to think about the consequences until it's too late. We sometimes take the added risks to trade when we shouldn't. Most of us, okay, and I mean most of us, me too, we tell ourselves it's okay to make these mistakes, but really, in all fairness, it's not okay. The first one I want to talk about is measuring twice and cutting once. This is a term in construction where you take the time to really make sure you have the right numbers before you decide to make that cut or make that charge or take that trade. Okay? You have to begin to create yourself a mantra, if you will, of when you open your ticket, you place your quantity. You've checked your asset, the one that you've been on. You've read aloud. Maybe writing them down or saying them aloud, repeat them as much as possible. Euro USD 1.1252. And you keep repeating that as you're going through it. So when you get to placing the order, okay, getting the opening the ticket, you've placed the quantity, you've checked the asset, you've checked the quantity again, okay? You've looked at your paper to confirm, and then you push accept. It's only till you start this mantra, it's only till you start this rhythm, if you will, that you can actually start to progress to be more profitable. Because what does one mistake do for you? It hurts you. Now, an idea too here is that if you do make a mistake, what do? Do you just let it go and hope for the best? No. Get out. If you're in for a loss, take the loss, whether you're live or demo. Teach yourself that it's not okay to make mistakes when trading. Now, mistakes happen. I understand. So getting in and out and losing some money to do that may hurt you a little bit, but you'll remember that pain. Your mantra will get tougher and tougher and tougher. Okay? Next on the list. Plan your trade, trade your plan, then trade your plan. I think I said that right? Plan your trade, train your plan, then trade your plan. It's a play off of words off the, plan your trade, trade your plan kind of thing, right? But it's seriously, once again, when can you trade? This is making your plan now. When can you trade? How long can you trade for? Setting these guidelines for yourself, knowing what time of day you make it quiet, you close the door, you gag the kids, you put in earmuffs, you get good music on, you get yourself pumped up, whatever it needs to be. Setting these times is very important. Just going willy-nilly all over the place really doesn't set your time to be your time to trade. The best traders, the ones that are the most successful, are the ones that make the time to sit down in front of their computer, prepare for themselves for trades, and have everything ready for them to be able to take those trades swiftly. Okay? Have these rules set. The rules that are for the signals, have them printed out on a piece of paper. Have them written down. Have them into your mantra. Is that 2 or above? I need to go 2 pips higher. Nope, that's not 90%. I just checked the chart, not 90%. Don't trade that one. There's not a strike available. Don't trade that one. Set these mantras inside your head for setting the rules so you can then become so efficient with these that nothing can break you from that cycle. This will also go for that, measure twice. Have your maximum risk and profit understood, remembering that 10% of a profit margin, 10% of your risk, of your balance of $1,000 is $100. Trading one contract at $80 of the risk, because you want to make 20, is still below that. But if you do 2 and you have a $1,000 balance, that's no longer within your risk management. So have these written down. Maybe on a piece of paper or a sticky pad or a notepad or something, sticky note that's on your computer. Don't trade them more than 2 contracts. Having this idea and everything out in front, knowing what your rules are until you get that mantra down. This is what's going to prevent you from losing. Okay? And help if you do lose. If you do happen to lose, it's going to minimize the amount that you do. And look at your data. What I mean by this is that use the charts, use the spreadsheet, understand what that spreadsheet is, how does all that work. Knowing your spreadsheet, looking at the different levels on each trade on there, how to navigate it is very important. once you know which assets trade at what time, that's another part of your plan. So if you're in the kitchen, you see a USD CHF and you see that it's 3 o'clock, but the USD CHF is like at 55 or 50 on the 50 pip, you may not trade that one because it might not be close enough to a daily. Knowing what data you have and the assets and the process, knowing it all can help you set your plan. And that only comes from the Learning Center and from training. So you want to make your plan, you want to train in it, and then and only then, once you've trained in it sufficiently, then you can trade it live. This is what's going to set you apart from everybody else. Those that are in with Senior and Elite by their name are there for a reason. They showed the capabilities of following rules, following guidelines, listening to advice. Do they still make mistakes? Absolutely. That's not why they got it. I understand that mistakes are going to happen, that you're going to push the envelope a little. But it's how you respond to the recourse of it, to the consequence. That makes you a trader. All right, this is a big one. Take profit on your winning trades. Now, some people don't, this is not just about scalping, okay? This is about part scalping, part letting go, right? A commonly overlooked risk management practice is taking some of your profits out of the trade when it's in your favor. So if you have 2 contracts on board, I usually trade with about 4 contracts on our corporate account. But if I have 4 contracts in there and I get a really good spike in the money, and the money just really go up, and it gets me about 3/4 of my profit margin, I might pop off two contracts at that point. I might just skim that off because I know that, yeah, it's going to come back down. It's going to do what it's going to probably just really touch that, but I know it's still going to win, right? I know it's still going to be over this line. It's still going to win. But I wanted to take some of this money with still winning even more, the full Monty on the other 2. So I'll take good profit up here, okay profit up here, and great profit here, right? Until I get a really good understanding that, hey, you know what? I'm going to leave it and just let it go all the way. If I get on a really great asset, maybe something of, if I got 98.5 from an Audi USD, I might just let the whole thing just go, not even worry about skimming off any profit. But if I got something like 90 to 92%, it's kind of going like this, it's ranging all over the place, but I got good money here, I might scalp the whole thing, or I might scalp off just a portion and let the rest go. All right. So this is a good practice once you get 1 or more contracts. So of course you can't do it with 1 contract, right? Let's be serious. Wish you could. That'd be cool. Lastly, back away from the screen when you can. All right. Any altered state of mind. Come on, you know what I'm talking about, right? Taking a couple glugs, taking a couple swifts, taking a puff, whatever it is, right? Whatever your vice is. If you have a vice, definitely don't be trading. Okay. Even if it's the cocktail after the hour of the hour. Okay. Even if it's the, I'm just having a beer kind of thing. The idea is that if you won't, I don't even know how to justify, of course, having a beer, having 1 drink, does that put you in an altered state? Who knows? Okay. But my rule of thumb is that I don't do anything that's going to mess with my trading. If I get really super angry, if I just came out of an argument, or if I just had an issue, or I got mad at somebody, or whatever reason, I'm just in a bad mood, don't trade. If you're overly tired, now this one's tough because I'm usually always tired, right? I work 16 hours a day. I'm tired. But I know that if I've performed, if I've done my training, if I've done my trading, and I've learned, and I've got my mantra, and I have everything in line, can I bend some of these? A little bit. Not a lot. About 2 weeks ago, 3 weeks ago now, I had to pull back from a whole week of trading because I was sick. I didn't feel good. And I knew that even in that state of being sick, my mantra wasn't as up to par as it should have been. I made 1 mistake in the beginning of the week, and that was the clue. Oh, wait, hang on. Sometimes you don't know until something bad happens. Then I pulled back, recovered, got my senses about me, and started trading again the next week. Chasing a loss is another big one too. If you have a loss, let's say you got into something, maybe you made a mistake. Maybe you made a mistake and and you had a loss. Maybe it's the first time you raised up to 2 contracts, whatever the reason, whatever it is. Maybe you choked up or something, you broke a rule, and then you're like, I did 2 here. I better go do 4 now to get this one up here. Don't chase it. Once you have a loss, even if you need to stand up from the computer, walk around, okay? Go get some fresh air, go get a cup of coffee, go talk to your spouse, go punch your kids, whatever it is. Remove yourself from the trading atmosphere to clear your head. Talk through it. Write me a note. Say, I'm having a hard time. Try to talk you through it. I've been in 1,000 of these. There's probably not an experience in trading and screwing up that I haven't seen yet. All right. I once, I kid you not, put 111 trades, 111 contracts, because I was so tired. When it first came up, I automatically put the 1 in, but I wanted to do 10. Okay. I wanted to do 10 contracts, right? So I put another 1 in. And I seen the 11. I seen 11. I was like, I'll just leave it. I went to check something, came back, got in again, and put another 1 on because I was so used to hitting that 1. And put 111 contracts on. Yeah, and guess what? It started to fill them. And I wasn't sure what it was. About 3 minutes in, I started looking over, and I'm like, I saw a working order because I wasn't paying attention. I had 50 things going on. I was in the pro trader room. I was doing stuff online. I was talking to somebody in the customer service division. I was on the phone. Okay. So I was able to get out and did okay. Okay. Once I figured it out and got it on, but was it fearsome because they don't all come out at once. They don't all come out. They don't all go in at once, and they don't all come out at once when they're this high. I ended up losing pretty good. I ended up winning overall, because I was able to get in and make some better of it, but with a lot of analysis. Okay. I didn't want to have to pay the price for this one. This one was pretty big. Critical things happening in your life. If you have something very critical in your life that's happening, a death in the family controversy, whatever it might be, it's tough. It's tough to take that step back because you then blame them or blame the situation on why you're not trading. But in all actuality, what you're doing by not taking those trades, you're saving yourself money. You're saving yourself the risk to ruin. And this can't happen unless you have to be so adult with this. You have to be so disciplined to be able to remove this from your life. And sometimes all these things might be happening in a span of a day or a week or 2 weeks. If they continue to happen to where you can't really trade, you even then have to start asking yourself, is the trading life right for you? Are you always in an angry state of mind, too tired, chasing a loss, or altered state of mind? If you're here, there's some great places that can help you. I make a joke of it, but it's true. I know it's tough. All right, what's next? Show me my withdrawal. Now, this is really, I love this one because it just means then you've reached that level of success. Some of you have not gotten there yet, but this is something that you can look forward to. When paying yourself, okay, if you choose to do so, a couple of things that you have to figure out first is, one, how much do you need a month to make your life okay? Or how much do you need to pull out to make this all worth it for you? These are questions that I can't answer for you. Is that 1,000? Is it 2,000? Is 4,000? Is 20,000? Whatever it might be. I say keep it obtainable, keep it real, and this will help you get to that success rate. Because who wants to set, I want to make $50,000 a week? Come on, let's be serious. You're not here to make $50,000 a week. What you're here to do is make a living. Okay, make a career, work from home, make something supplemental, whatever it might be. Don't chase somebody else's dream or some sort of car that you want to get, or, if you do have a goal of that size, then it's going to take a lot of work. And I'm not trying to discour you from it. I think you could do it. But the point is, you have to start acting as if you are that then. You have to become that model. You want to make $10,000 a month? It doesn't come from somebody being at the supermarket placing a trade and only working an hour a day. Making $10,000 a month looks at about 4 or 5 hours at the computer every day, analyzing the trade, following the guidelines, and producing it. And you can do that here, right? I don't even have my disclaimer out today, so I can't really talk about money too much, okay? But can you do it? All results may vary. Let's just play that one. But the idea here is that if you're going to have your amount set, have it set for what you need per week, draw that line in, say, okay, when my balance reaches $5,000, that's my maximum efficiency. That means that I can have about 5 signals, five contracts per trade out at any one time. I don't really need much more than that because I don't want to risk much more than that at any one time. And if I trade 20 times a month, you have your plan. If you have 10 days a month you're trading, you're doing that for 2 or 3 hours a day. You're getting 2 or 3 trades in at those times on each time. 40 trades a month. $20 a win, $40 a win, $80 a win, depending on your balance. You can then start to circumnavigate this whole process of guessing. You are now a calculative instrument. And that precision that you have now can start to pay you. So once you have this line, let's say it's whatever it is, $5,000. Anything over $5,000 becomes your money that you want to take as income. So decide when to pay yourself. You can pay yourself once a week. This will give you that weekly pile of cash that you need every week, you know. Now remember, consult a financial advisor or a consultant, not a financial advisor. Okay, that's a whole nother story. You know, if you do have one, make sure that he's a fiduciary. Okay, don't be going after some crazy, I just downloaded my financial advisor license off the internet guy. Okay, but what you want to do is consult your accountant, consult your tax advisor on how much you have to pull out for taxes and all that stuff. But each week when you pull out your money, doing so gives you that I just got paid week. Okay. Bi-weekly sort of gives you just a little bit more to keep that cash in there, have your balance grows a little bit more. But I usually find that for those people that are used to those incomes that are every 2 weeks, it's whatever you're used to, okay? Monthly, this is a tough one, and you got to really maintain it. This is your only source of income coming in. This is a real tough one. You got to be really disciplined in your bills. I'm not here to tell you what to do with that, but this one's really tough. I've tried this one, especially when trading was my only income. But now, the quarterly income coming in, I treat this because I'm an LLC as well. I'll treat this as my trading income from my corporate account as my quarterly bonus, my CEO bonus or CFO bonus, whatever you want to call me, for my LLC. And this is very powerful because the income tax changes. Remember, talk to an accountant. Maybe make yourself an LLC, find out how to do that. We might even do a series on that, on how to be a business, how to make trading a business.com. Whatever it might be. Okay? And I love it because I love me. I love being me. I love being here. I love doing these things and helping as many people as possible. That's that whole series right there is this. These are the 5 things that most people forget about doing when you're risk managing. Okay. For those of you that are watching, Taxes Suck, Mike says, for those of you that are watching after the fact, I want to thank you so much for tuning in. And being a part of this. Make sure that you go through this a couple times if you need. For everybody else that's inside the chat room, please stick around. We got parting gifts for you. No, we just have questions and answers if you have anybody has questions that we can answer here. Everybody else, thank you very much, and I look forward to seeing you inside.